Good afternoon, everybody. Thank you for joining us. I am Rob Behunin with R&R Partners, and welcome to the Salt Lake Chamber's webinar of Inflation Matters. Today, let me just kind of set the framework for this. Inflation has been on all of our minds without question. We saw a persistent jump in June. Things seem to continuing trending upward. Fuel prices, food costs, housing costs, and we're seeing another 40-year high and likely solidifying. People who have to pull the levers and push the buttons to try to help us bring this in and rein this in, including the Federal Reserve, plans for another big rate hike this month. And so the Chamber, our leadership at the Chamber, thought it was a very good idea, and want to thank our Chamber team, Derek, Heidi, all of them there, Ginger, for assembling a group of Chamber partners to discuss their respective insights from their industries, specifically in transportation, food production, and fuel production. So the purpose of this webinar today is to help educate and inform all of you out there in our Salt Lake Chamber network. And let's see what we can learn about inflation and how it's growing and what it's doing and how it's impacting people right here on the ground. So let me introduce you to our panelists today. We have Reid Forester with Delta Airlines. Thank you, Reid, for being here. We have Ron Gibson from the Utah Farm Bureau Association, and Ron is actually on the farm today, so you can't get any better than that. And looking forward to hearing from Ron in a bit. And then Rikki Hrenko-Browning from the Utah Petroleum Association. And Rikki, I guess the only other thing, besides sitting there with all the logos behind you on the wall, if you'd have been on a workover rig or something like that, you'd be parallel to what Ron is doing. So anyway, thank you three for being with us. We'll try to have some Q&A with this webinar, hopefully to kind of dig into some things. And we're asking that you use the chat function. Since we won't be taking any live questions, please use the chat function as we go along. And our staff will parlay that along to us, and we'll get to those at the end of the presentation. So without any further ado, let's hear from our guests. Rikki, let's start with you. You take a moment, tell us about you and the Petroleum Association, and then help educate our listeners on what's driving fuel prices at the pump. I understand you might have some slides for our group as well, and we'll go to that point.
Great, thanks, Rob. Thanks for this opportunity on behalf of yourself and the Chamber. My name is Rikki Hrenko-Browning. I am president of the Utah Petroleum Association. So we represent upstream, midstream, and downstream oil and gas interests in the state of Utah. Upstream just means crude exploration and production. Midstream is transportation. Downstream is refining. So I'll kick things off if someone could put up that very first slide and just go straight into the question that you had asked. There you go. That's perfect. So I think it always helps just to look at what really drives fuel prices. And to start with that, let's look at the breakdown. So I'm going to focus on the pump on the left, the regular gasoline. And what you can see there is that by far and away, the biggest driver by far is the cost of crude, sitting at almost 60%. Refining is under 30% of the cost of what you pay at the pump. Distribution and marketing, which is the retail portion of that, is about 5%. And then what you pay in taxes is about 11%. Just to put that into perspective, Utah's gas tax is about 32 cents a gallon. The federal tax is about 18.4 cents a gallon. So it's only about 50 cents a gallon mid-range. So really what we need to focus on is the cost of crude. That's really what drives the prices at the pump. And the cost of crude, as I'm sure most of you know, or all of you know, is set by a global market, primarily by supply and demand. Typically when the cost of something goes up, demand drops. That's basic Econ 101 that I'm sure many of you remember. The strange thing at this point is we're not seeing that happen. In the past that has happened, but we're seeing a real insensitivity to price increases right now in terms of demand. So I think there's a lot of things behind that that are kind of driving that crude price increase. The first, of course, is just tightening crude supply. We had the global economy completely shut down during COVID. Demand for fuel plummeted, and both refineries and crude producers responded by ratcheting down as much as they possibly could. The challenge now is it isn't easy, especially on the upstream or the crude production side, just to ratchet supply back up. It's not that easy to just turn a well back on. Our industry is faced with the same supply chain challenges and labor shortages that all of the other industries are seeing. We're seeing 200, 300% cost increase for things like steel and pipe. And we also operate in a very regulated environment, which makes that quick increase in production very challenging. And then if you layer on top of that our current political environment, where we have an administration that campaigned on no new drilling and a president that started to make good on that promise his first day in office, that's resulted in a very real challenge to expand drilling, as well as to secure the necessary capital to finance additional production. So I would say that even as the supply starts to catch up, that's only half the picture. If you go to the next slide, and I'll try and run through this quickly. If we go to the next slide, there you go. The other half of the picture is the refining capacity. So even if we have enough crude on the market, we also need to have enough refining capacity available. And what we see today is that our refineries across the United States are operating at a utilization rate of about 95%. Same for Salt Lake, which is very, very high in the refining world. If you look historically, I went back to 2014, what you can see there is typically refineries operate at around 90% or higher. So 95% is really running full out, and there isn't a whole lot more that we can push our existing fleet, even if we did have crude supply, to increase the amount of supply. The US refining sector has lost a little more than 1 million barrels a day of refining capacity. And just to put that into context, the US consumes a little over 9 million barrels a day of gasoline. So it's a significant loss, and we have to look at both of those supply factors, both on the crude side and the refinery side, in order to understand what's driving some of those prices.
Great, thank you, Rikki. Tell us, just as a follow-up to all of that, we're hearing a lot in lots of different places that our fuel companies are seeing higher and higher and higher earnings. I mean, just more now than ever before. Can you tell us, is this, myth or fact, or where does that lie? You want to be a myth buster on that one? Help us out. What do we need?
Happy to be a myth buster there. So if you actually go to the next slide, let's focus on the top left graph first. So what we're looking at here are returns across various sectors, and just to color code, the dark gray is the oil and gas industry. Dark blue is the oil and gas industry. Gray is finance, black is industrials, light gray is the IT sector, and red is communications. So first of all, I think we have to take a little bit of a history look and look at 2020 and what happened. Our sector was hit in terms of returns significantly harder than any of its peer group sectors, where you see that big drop in negative earnings. So the sector lost a lot of money, and losing 15% or more earnings per dollar of revenue takes some time to recover for shareholders. So we're starting not at a kind of even starting point. But if you look forward, take a look at 2021, for example, you'll see that thankfully we have had a recovery in the segment. So if you look relative to these other S&P 500 sectors, we are not at all out of line in terms of earnings comparing against banking, transportation, IT, electronics, communications. Quite frankly, those other sectors, in the most part, are performing better than we are. We do expect we'll see that increase a little bit in 2022. But I think that we need to look a little more holistically at how we compare to other sectors. I think it's also really important to keep in mind who owns America's natural gas and oil companies, and it's quite literally millions of Americans. Whether you're talking about retirement funds, 401ks, pension funds, these are investments, very, very small percentage, only about 2.4%. And now I'm looking at the pie chart on the bottom right, only about 2.4% are owned by oil and gas industry executives or corporate officers, which is something that we hear about all the time, that, the industry is somehow purposefully driving up prices, keeping supply low so that the executives can have some kind of windfall profit. And that's simply not the case. The data shows it's not the case. I think it's also important, just going back to kind of who owns what, to remember that the supply chain across the oil and gas sector is really long. The company that produces crude is not the same company that transports it, is not the same company that refines it, and is not the same company that you are purchasing it from when you fill up your gas tank. Refiners actually own less than 5% of the almost 150,000 retail stations across the country. So even if a station bears, a Sinclair dyno or the Chevron logo, it doesn't necessarily mean that that refiner owns or operates that station. The vast majority of branded stations are owned and operated by independent retailers. And actually more than 60% of those are owned by an individual or a family that owns only a single store. So, I think we need to have a little bit of a better understanding, or it can be challenging to understand all of everything that goes into getting that price at the pump and getting that molecule into your vehicle.
Terrific. Thanks, Rikki. And I know you've mentioned a little bit already about the political situation that we have with the Russia-Ukraine war helping us out here in this whole scenario, causing problems for us. But maybe let's a little more practical solution right down to kind of where the rubber meets the road. It's not unusual for us to see high gas prices in the summertime as people go out and travel and do things and those sorts of things. And summer demand increases, and that's going to lead us a little bit into our next guest, Reid Forester with Delta Airlines. But what's your crystal ball say if it's not broke like mine is? Mine's always seemed to be in the shop. But can we expect to see prices cool off a little bit as we move into the fall and winter months? What's the industry? How is it preparing or perceiving all of this?
Yeah, I would not bet on my crystal ball either, Rob. And I would be very cautious of suggesting anyone to follow anyone else's crystal ball at this time. It's a very volatile and unprecedented price environment that we're seeing. Before I get there, I just want to address quickly one other point you said about the Russian invasion of Ukraine and what impact it is having or maybe having on pricing. So, if you actually go back and look at data, what the price was, and you can look at this at the Energy Information Administration, there's lots of places you can find this data. On Inauguration Day in 2021, when the current administration came into its leadership, WTI was at $53.40 a barrel. On February 24th, 2022, the day that Russia invaded Ukraine, the price was $99.66. So 87% increase. Certainly, the invasion of Ukraine is exacerbating those prices, but certainly our current price environment is not predicated upon that invasion. There's policy implications that have been driving that since this administration came to office. But if I'm going to take a guess at what happens in the future, there are much more intelligent and well-versed individuals than me doing this. I would say that you will see prices at the pump drop a bit, but only a bit. Summer is typically our highest pricing season. We have summer blend, which is more expensive to produce here in the state of Utah. It's driving season all across the US. We're already seeing a little bit of a reduction of price at the pump. I think that's probably more due to concerns about the looming recession than it is any fundamental change in supply and demand. But looking medium term, I would not expect any very significant changes because our supply and demand situation doesn't look like it's going to fundamentally change.
Well, so the watchword is be prepared, buckle up, and we'll just watch and see where the markets go. And Rikki, I don't know of anybody in the state who spends more time at this than you do and has such a global perspective and a handle on energy and energy in our state. And thank you for your insights today. Appreciate it. And we may come back to you with some questions. So I think this is a nice segue since we're talking about summer and travel and transportation and fuel. And Reid, welcome to the webinar. And if you would just take a minute and tell us about you, for those of us out there who don't know you, and then just launch right into talking to us about the record number of travelers and high demand, and if that demand continues to grow, what we can expect to see, and when we book our next ticket to travel. So take it away, Reid.
Absolutely. Well, thank you, Rob. Appreciate the opportunity to speak to the group, and happy to be here. My name is Reid Forester. I'm a regional sales manager with Delta Airlines based here in Salt Lake City. What that really entails is that I manage a team of people who go to corporations and negotiate contracts for air travel on Delta Airlines in exchange for their employee or business travel, if you will. And yeah, kind of just launching right into it. I wish it had a couple of slides like Rikki did, but at the start of the pandemic, our business went from basically we lost 96% of our revenue in less than a week, right? So we really dropped down to about 4% of our revenue on a per annum basis. And so it was obviously very scary times, right? Wasn't exactly sure how this was all going to play out in the long run. And I think we're still looking at the effects of the pandemic 2 years ago and just seeing how that really is starting to play into in people's pocketbooks, as today, two years later. Talking about air travel, I've been in the industry for 22 years now. It is very cyclical. We have seen this before in the past. And I think with these different blips in the economy, you'll see airfares rise and then you'll see them fall. If I were looking into my glass ball and take a best guesstimate, I would think for the fall that we will see a little bit of the lessening in pressure on the prices for air travel as we get through the summer season and people are heading back to school. You really do see a little bit of a lessening in the price of the airfare. I know that when people are going out to the airport now, it is chock-a-block full. We are running at the highest capacities that we've had in the past, 90% full flights, and even our new airport is incredibly full. But I know that there's plans in place with phase 2 of the airport to lessen some of that pressure on the passengers in that central terminal. And in the future, I expect better experiences for our passengers when we get through this kind of summer anomaly and this little blip.
Thanks, Reid, for that. Now, you mentioned that as COVID hit, and of course, we all saw that as well, watched the airlines really suffer as people had to quit flying as things were shut down, and you mentioned your revenues were significantly reduced, took some big hits. Along with that, tell us a little bit about the federal bailouts of 2020, especially in regard to airlines. And was this to keep the lights on? How were these utilized? Give us a little insight to that piece of it.
Yeah, again, as we headed off into that unknown territory of early 2020, and we had the opportunity to work with the federal government for some bailouts, I think it was really, again, the great unknown. It was more, let's work with the government. Let's see what we can do to really kind of keep the lights on, right? And continue to be able to provide service as much as possible during those early days of the pandemic. But, I think that certainly initially starting off, it was really all about trying to maintain business operations as much as possible as we could through those early days. I think what we've seen now after taking the bailouts, I think there was an opportunity as well to maybe right size the organization, to streamline a little bit, and try to get more streamlined operations. I don't know if anyone has seen today, but we actually were from our second quarter profits, we have invested about $834 million. A bit of that will be noticed in new airline orders, right? So I think that there's an article today in the press talking about how we have invested $100 million with Boeing to add additional aircraft into our fleet. So long-term projection and the thought process is that we will get through this. This again is another a little blip on the radar screen, a little bit of anomaly, but our expectation is that we're going to realize everything from pre-pandemic 2019 levels and then some, and thus you see the investments that Delta is making in our fleet and fleet strategy to streamline and make it more economical. So to answer your questions, I think initially it was really kind of let's keep the lights on here. Let's, we are part of the financial economic engine that makes, the United States turn with getting people where they need to be, whether it be for leisure or for business. And so with that, I think that, our investments are for the long term, that we'll be through this, we'll get through this, and we're investing for the future.
Well, that's fantastic. And yes, $834 million in new aircraft, and so that is significant. And I think that's just an interesting and important commitment on the behalf of Delta, the airline industry, to just keep moving forward. I've crossed lots of businesses in our state, in talking to people, whether it's real estate development, transportation, other places. People are still trying to move forward, going to move forward. And I think that's, at least in terms of my crystal ball, I like to see that. Let's keep things turning. But so let me ask you this, maybe a little sensitive question, but I know you've got the answers for everything. So we're going to have more aircraft. Are we going to have pilots for them? And we're going to have people and personnel and, the whole, labor shortage, everything that all of us are seeing here, on this panel. So talk to us. Great to have more planes, but if they're parked, tell me about that.
Yeah, no, fair point. And just to clarify, so the contract that we've announced today with Boeing is for about $100 million, 100 additional aircraft. We're suffering the same shortages and labor problems as all industries are, right? It's not, it is something that we're suffering as well. The thing is with the pandemic, we did have an opportunity where there were quite a few pilots who did retire, right? They took the early out package, they retired, and certainly left us with a deficit of pilots. We are currently in the process of hiring and training pilots. It takes about anywhere from 3 to 6 months to train a pilot to go from one type of aircraft to another. So for instance, if you're going from an Embraer 75, which is one of those smaller regional jets, up to a mainline aircraft, which would be a Boeing 321 or possibly an Airbus 321, a Boeing 737. It dependent upon the aircraft type, it takes a certain amount of training. So we are getting through that now, and we're kind of working through that backlog of training those pilots and getting them rated to their type of aircraft so that we can get them on the line and get those planes out there. So, I'm fully hopeful and expectant that if we're going out in the market and saying that we're investing in aircraft to put into our fleet, we will have those pilots available to man those aircraft and, get our customers to where they need to be. And then again, obviously kind of fully complement our network as well, right? So with the pandemic, you did have to pull down certain cities dependent upon, what made most sense within that network. And so right now out of Salt Lake City, we're about 82 to 84% fully recovered with our network, but the plan is to get it obviously to pre-pandemic levels and then grow, right? The investments at the airport that you see out there west of downtown are just continuing. We're in phase 2 of the construction at Salt Lake City Airport. And when that phase 2 opens up in September of 2023, certainly the passengers will experience certainly more space, more gates to park more aircraft. So you'll start to see a lessening of the pressure at that terminal, certainly on Concourse A. But yes, to answer your questions, we will have those planes and those pilots fully staffed, pilots, flight attendants, as well as gate agents and ticket counter check-in personnel as well. I know that our local Salt Lake City airport team has been hiring furiously for the past 6 months and working to get those people ramped up so that they can serve our customers in the way that they have been accustomed.
Great. Thank you so much, Reid. Appreciate that. And so the kind of watchword on the Delta side, at least here in Salt Lake and then company-wide, is we're going to power through this. Inflation's here. We know we've got challenges, but you're committed to keeping things rolling and moving forward. Can't go back to a standstill like we did before. Can't at all. So I take that as a great ray of hope to be able to hear you say that, and appreciate Delta's investments, your work, and the commitment that Delta has really to Salt Lake City. It's an important hub for us here, and I know it is for the company as well. Well, hang on with us, Reid. We might have a couple more questions at the end here, as we've got one more panelist. And Ron, well, welcome. Looks like you're out of the truck and into the barn there. Have you got the cows milked and the barn doors shut? I had 2 horses get out today, had to go put them back in. It wasn't a pretty sight, but thanks for joining us. Just take a couple of minutes, Ron, and tell us about you and where you are, and then we'll just let you launch right off into the first question here. You kind of told us on your brief up that we had a day or so ago that the ag industry, food producer industry, really saw some of this inflation coming 8 or 9 months ahead. Your crystal ball was working a little better than the rest of ours. So tell us a little bit about you, and then help us with that first question, if you would, please.
Well, thank you. My name is Ron Gibson. I'm a 6th generation farmer here in Weber County, working on the same land that's been in our family name for 153 years. Work with my son and a couple of my other kids, and just love what we do here. We feel a tremendous stewardship to be here and to continue making this work. I have to say that I'm really grateful for the previous panelists, because with all these cancellations and stuff that Delta did over the last month, I had a trip to DC 3 weeks ago and it got canceled, and I was the happiest camper you've ever seen in your life. So I like it when I get my trips canceled. So you can keep doing that, Delta. I appreciate that. But seriously, on a funny note, and the fuel is just such a driver, such an important driver for our economy. And I think that in so many ways, what happens when our world goes upside down like this is everybody freaks out and we kind of panic buy a little bit. And I know that on our farm, we were trying hard as we could to find every gallon of fuel we could find, because for a minute there, you think that we're not going to be able to ever buy it again. And that's got to have something to do a little bit with some of the stuff that's going on. And I know that that's been the case in agriculture. We have a dairy farm here. We milk about 1,500 cows, and then we're also a fairly large produce grower, and we have a lot of onions. And we could tell early last fall that the world was starting to get wonky, because the drip tape that we use for our irrigation for our onions was up 35% from the previous year, and that's made of a resin, out of oil and stuff, and then our fertilizer costs were up 35%, and as we moved right through that system in January and February, just everything we had across the board was up. And so it's going to cost us it's going to cost us 47% more to raise an acre of onions this year than it cost us last year. And so, you know, if you just take that across the board for all of agriculture, you know, we definitely are leading on the inflation side of the world. And that's in a 12-month period. And so we're really concerned about where that goes. And at the end of the day, every single cost that agriculture bears is actually borne by that end consumer somehow. And it'll be borne in one of two ways. Number one, either that end product will be raised and the consumer will pay that higher price for food, or number two, the farmer will go out of business, which will then create less food. And again, we have that supply and demand equation that was talked about earlier, where there's less supply and so the cost goes up. And that's kind of the state of the agricultural industry right now. There's a lot of scary stuff with the interest rates. You know, borrowed money has become a very important thing to everyone in the economy, I think, and it's especially an important thing to the agricultural industry. We work on such tight margins. We work on such tight margins that you know, 2, 3, 4, 5. You know, where is this interest going to end up? You know, because you know, a lot of our operating loans and stuff have been at 3% interest, 3 and 4, and if that ends up at 10%, and that could be a conservative number, that ends up at 10%. You know, there's more money than farmers have made in that difference of percentage in decades. So those are kind of some of the things we're seeing and some of the concerns that we see on the food front.
Thanks a lot, Ron. I know well, I think all of us do, hopefully, that the small margins farmers really operate on. And if there's a group in our culture and community that always seems to do more with less, you're the ones, whether it's you know, higher interest rates driving margins thinner, whether it's drought, right? Less water for things that we need, and all of those coming in. And so appreciate your efforts there. Talk to us just a little bit in terms of our food and our food supply and this whole inflationary climate that we're in. Talk to us about the external food producers, folks outside our country, and how is that impacting, you know, what we do and what you do as well.
Well, agriculture is the one industry that does have a hard time setting that final price for the end consumer. You know, as a dairy producer, for example, I produce that milk, I put it on a truck, I send it to the plant. 45 days later, they send me a check for whatever they want, right? I mean, I have no choice in what the price of that product is going to be. You know, if we look at something different, I'll just use Delta as an example. I can get on my app today and I can look it up and they'll say, okay, Mr. Gibson, the flight's going to cost you X and you can choose to take it, or I can choose not to take it. You know, as an ag producer, in a lot of ways, those products that we put on the market, we don't have any of that choice. We put it there and we get paid what the big guys want to pay. So although we've had inflationary prices on the expense side, I'll just use the dairy industry as an example. We have been paid over the last 4 months more money for our milk than we have since 2014. So we have seen a very inflationary price and the pay price for our milk. The question though that comes down to is, what does that do to the demand of that product? And what happens, I believe, is that the normal mother of children that's at the store buying groceries looks at that, and if that gallon of milk is $4.50 or $5 instead of $2.50, probably buy less, and we're probably going to drink a little more water, juice, or soda. And And so at the end of the day, we kind of curbed the demand with what we're doing there. And so the thing that I've noticed this time in the uptick of milk prices, normally when milk goes up, farmers add more cows and somehow they find a way to fill that hole and to produce more. This time it has not happened. And that's the first time in my lifetime that I've ever seen that when the price of milk has gone up, producers have not added more cows and milked more cows to meet that demand. And that tells me that the agricultural producers right now, we're just talking about dairy, but those dairy farmers are skeptical of the future. They are very scared about this inflation stuff that we've been talking about, and they're concerned about making that investment into the future, knowing or having the unknown of where that's going to end up. And that's the big concern that I see for our food supply is we can only push our farmers and ranchers so far, and at some point they're going to say, you know what, that risk is not one that my family can take, and I'm going to hold back a little bit.
Got it. That makes a lot of sense. And I don't know how many of our folks out there really knew that or know that, you all have to meet the demand by adding more production. And this time that's just, as you say, that's not happening. So let me ask you this, and I hope it's not too off topic for our audience, but I'm always interested in helping the farmer. I've got 10 acres out here in Wellsville. I give all of my alfalfa to my dairy farmer friend down the street because that's what I want to do. How can our business community, what can we do to best help our farmers and retain our food security? We talk about energy security, talk about food security. What can we do to help our agriculture industry through these challenging times? What do we need to do?
Well, I really appreciate that question. And, you know, some of the things that we've all talked about, it's hard for just a normal person to fix. Like, I don't expect my neighbors to fix the inflation and that kind of stuff. But there are a couple of areas that you can really help your local agricultural community. One of those is support local farms every time you can. If you have a farmer ranch that does a agritourism event, go there, support them. If you see local farms that are selling their produce on the side of the road or at a stand or in the grocery store and it says, you know, it's local food, buy that local food, pay a little bit more money, even if you have to. Many times you don't have to pay more money to get it, but pay a little more money so that we get that food from America and from Utah instead of from Mexico and Argentina and Chile and all those other places that don't have the safety regulations in place that we have today. The second thing, other than support your local farmers, is when we are dealing with our elected officials, show support for your local farmers. And our state's under assault right now for agriculture. And you know, and it's not that anybody's doing it in a malicious way, but the development and the growth that's coming, that those houses go in one place, and that's on farm ground, right? The houses aren't going on anything but ground that was farmed. And so we want, as agricultural producers, we need to protect our right to be able to have the property rights and sell when we need to sell, but we need to help our farmers and ranchers be profitable in what they're doing, and many times that comes through regulations. We've had a lot of discussions in the state legislature over the last 3 years about zoning, where many of the counties in our state have said, we don't want animal agriculture in our whole county. Well, how can a state like Utah, that's 70% public lands, go out and designate counties that don't want animal agriculture? That means we don't want cows and chickens and pigs on like, where do we want that to go? Like, we all want to eat our bacon and eggs and milk and beef, but if we want to, we don't want to be inconvenienced by some sort of a smell, that's a problem. And so we need to show support that way too. Like, if we want agriculture to be a real thing in the state of Utah and continue to be over 20% of the state's GDP, because that's what it is right now. People don't know that, but 20% of the state's GDP is agriculture. And if we want that to continue to be that, then we've got to support agriculture as a society.
So Ron, thank you. You bring up a great point. I mean, I think, might seem a little bit simplistic for me to say that a lot of folks just still think the eggs come from the store and, the milk comes from Walmart or wherever you're buying it. And as Rikki and I have talked about energy, a lot of folks aren't really educated about where that energy comes from, which is something the chamber is doing and working on as well. And so I think continuing to educate our population on the needful things that we need to have to provide food security is really important. And I'm glad you bring up that point. So thank you, Ron. Appreciate it. Take care of the cows. I do want that glass of milk next time.
Thank you.
Angie's restaurant in Logan. We've got a few extra minutes here before time certain at 1:45, and if there's any questions from folks, we'll take those. But let me just go back around the horn here for just a minute, and in the context of everything we've heard to our presenters, Rikki, any final thoughts on our topic here today? Anything left unsaid that you didn't get to say that you wanted to say?
Yeah, Ron kind of stimulated another really important point. I just want to make sure I get through. And it's about the fact that, for better or for worse, energy prices underpin every other segment of our economy, whether it's our food prices, whether it's our airline tickets, whether it's the goods that we buy. Even if they're not petroleum based, they had to use a petroleum product for the most part to get transported to their final destination and throughout their supply chain. And in the same way that, Ron is advocating that we buy from local farms, it's pretty frustrating to those of us in the industry that we have, President Biden in Saudi Arabia begging foreign countries to produce more to solve our energy prices when we have more than abundant supply here. And the opportunity to really continue to be self-sufficient and to be an energy powerhouse that undermines so much of what we as a nation want to do in a not only kind of price environment, but from a geopolitical perspective and security perspective as well. So we have the ability to produce more locally, and hopefully we will be able to do so and have a policy environment that supports that in the future.
Thanks, Rikki. Reid, final thoughts on your part?
Yeah, two things really kind of come to mind, and one's tagging on to Rikki's comments there, talking about helping the U.S. to become continue to be a powerhouse on the world stage. I think first and foremost, I would say that forecast and positive thoughts. This is cyclical. We will get through this, right? Certainly, as a part of the transportation industry, I've seen it before, and the ticket prices, I think that you'll see kind of ebb and flow. So that's, a bit of good news from that perspective, in that, passengers would see some lessening of the pressure on the air ticket prices. But long story, long play, I want the message I want to leave with the community here is that Delta is committed to Salt Lake and Utah, and to helping Salt Lake and Utah become more of a power player in the United States, and certainly in the industry, in the international landscape as well. To that end, I know it was several years ago, pre-pandemic, when our current CEO, Ed Bastian, came into town and had a fireside chat with Natalie Gochner and talked about the future of the airport and the industry and Delta in Salt Lake City, and had even made a comment about an additional international destination, which was towards Asia. And we are fully committed to that. We will pull the wraps off of that, and we'll bring that market into fruition in due time. And I think it's just it's good for the community. It's good for Salt Lake. It's good for the state. And if I had to leave, one last comment with this audience here, is that Delta is committed to Salt Lake and to Utah. So thank you. Thank you for allowing me to be a part of this today.
Great. Thanks so much, Reid. And Ron, I know you kind of had the last word before, but let me give you just one other opportunity to some final closing thoughts before we close this out.
Well, thank you. I just really enjoyed being here today and appreciate the work that the chamber does and in helping, as we sit here today and we listen to, the airline industry and the energy industry and agriculture. I'm grateful for you too. And there's so many important industries that if we all work together here is awesome, but we gotta make sure that we take care of the things that are important, and we can get all caught up sometimes on some of the waves of the times, like the green energy and all that kind of stuff. And I'm not saying any of that's bad, but before we get too caught up in doing that kind of stuff, we need to make sure that we've got our bases covered. And before we run agriculture out of business, we better figure out how we're going to eat, because that's pretty dang important that we have stuff to eat. And I know I probably like food more than other people, but that ice cream at night is pretty dang important to me. And if we don't have the farmers that are there to do that, it's not going to happen. So I really appreciate the time, and thank you so much for all y'all do for the state of Utah.
Thanks, Ron. Much appreciated. And Rikki and Reid. And I'm not going to take too much time away from our audience. We may give you back a few minutes here. We don't seem to have any questions, but just a couple of underlying themes here, which I've appreciated from Rikki and from Reid, that you're forging ahead, you're powering ahead, you're making investments, you're going to ride this out. This is cyclical. And Ron, you said, much the same thing, that you've got people who are ratcheting back investments because they're trying to hedge a little bit. They're trying to see what's going on there. But what I do hear is that we're all committed to our food security, our energy security, and our economic and business security, which is based so much on travel. We can't do our business without getting to where we need to go. Utah, we're a global enterprise. We have businesses that start here and go out from everywhere. And so it's really important for us to be talking about this topic today and how we help each other move through it, because Utah, as we all know, does lead on lots of fronts. And so I appreciate the thought leadership from our good friends and leaders at the Chamber and bringing us together today. For those of you who are participating virtually out there listening, and again, to Rikki and Reid and Ron, thank you so much for your comments and for your time today. And this will be recorded and it will be placed on the Chamber website if I'm not mistaken. And you can go back and refresh and listen to these brilliant commenters again and again. So have a great day. Thank you very much. And on behalf of the Chamber, we appreciate your support and for participating with us today. Have a good day.